Okay. All right. So again, good evening, everyone. So in looking at the stock market, in looking at how we buy and sell shares, in looking at the pandemic, there are a few things that we need to do, and I'm here to walk you through some of those things to get our beginners on the way, and some of those who are investing already, just to add some knowledge. So going over some famous quotes, Warren Buffett, a famous investor, said, risk comes from not knowing what you're doing, right? And during a pandemic, the market is super volatile, and knowing how to navigate around risk will assist in boosting your portfolio's performance. Additionally, Warren Buffett also said, and I quote, we simply attempt to be fearful while others are greedy, and greedy only when others are fearful, end quote. The pandemic has presented us with numerous opportunities to purchase shares at lower prices as investors seek to exit the market from fear and panic. So let's talk about some stock market news. And Mrs. Marlene Street Forest would have touched on some of it already, but let me go through it in a little bit more detail. So in March 2020, when Jamaica had its first case of the coronavirus, the market fell by over 21%, and that's the main market. The junior market also fell by around 20%. That's pretty depressing, right? However, let's look at the flip side. From March 2020 to September 2021, the JC main index rose by over 18%, while from March 2020 to September 2021, the JC junior market rose by over 43%. What this means that the average return, if you invested in all the stocks in the junior market, your average return would have been around 43%. I mean, that's pretty investing. You don't get that on any other instrument nowadays. So let's go into the stock market news a little bit more. So during the similar period, as I mentioned before, we had 11 stocks increasing between 30 and 40%. We also had 11 stocks increasing between 50 and 80%. And we also had 9 stocks increasing between 100 and 300%. Some of these include Berger Paints, Supreme Ventures, Seprod, Lasco Distributors, The Lab, Grace Kennedy, CPJ, and Mailpack. Those are some impressive returns during a pandemic. All right, so let's go into the market activity for a bit. So when the pandemic started, there was a false start on IPOs and APOs. There were a few companies that were thinking to come to market, but they delayed with the uncertainty of the pandemic. But that did not stop the companies from, giving the market time to understand how the economy would have been impacted by the pandemic. And since then, we've had over 6 new IPOs and APOs since the pandemic started. This is a signal that the market is very much attractive for investment. And despite general slowdown in activity, investors are still asking for more IPOs and APOs. Some of these would include Tropical, Derimon, Fesco, Proven, the Cygnus SRF, and the Barita APO. All right, so let's talk about volatility. Volatility is actually our friend. So what we want to do is, let's define volatility. One definition states that it is the rate at which the price of a security increases or decreases for a given set of returns. When the stock market experienced volatility in March 2020 due to the COVID-19 pandemic, it created an opportunity for investors to acquire stocks that were deemed overvalued. We saw blue chip companies at prices we haven't seen since the financial crisis in 2008. And this led to many buyers seeking to re-enter the market. To navigate around the volatility, investors use technical analysis to look at trends, ratios, and varying other methods. We also use fundamental analysis and take a deeper look into the company's financial results and identify if the company is undervalued or overvalued. So what do you buy and sell? I know this is the question everybody's asking. You want to know what to buy, what to sell, right? So let's look at how we classify stocks first, right? So you want to look at the various classifications to see which one suits you based on your investment horizon. So let's look at some income stocks. So these are stocks that distribute a higher dividend in relation to their share price. You will want these in your portfolio because you want capital gains, which will go in a little bit, and you also want a dividend income to ensure that you're getting regular dividends to either reinvest or to use to spend. Growth stocks is also a stock you'd want in your portfolio. So these companies generally do not distribute high dividends. This is because they choose to reinvest their earnings for company expansion. When this is done, the company's earnings grow at a faster pace, which results in the stock price rising. We call this capital gains. I spoke about blue chip companies before. So you have blue chip stocks, which, these are well-established companies. These have stood the test of time and continue to perform. These stocks, they pay, the price is generally stable and they pay regular dividends, right? Cyclical stocks are also some that you should consider. These stocks are more affected by economic trends. Their growth lessens in a slow economy or rises in a booming economy. And defensive stocks. The stock price of a defensive stock generally does not fluctuate much in a volatile market. As a matter of fact, they generally tend to perform better in times of uncertainty. All right, so let's break it down a little bit more and put some of these companies into sectors, right? Because during a pandemic, you may want to buy a specific sector, hold a specific sector, or sell a specific sector. So let's go into the sectors. Some of these sectors include financial, distribution and manufacturing, real estate, industrials, and materials. These are just a few, right? By breaking the companies down into sectors, we're able to compare the companies like for like. And use ratios to determine their attractiveness, right? So some other sectors, just to mention, consumer discretionary, energy, financial, healthcare. These are just to name a few. Okay, so the question everyone is asking, who should invest? There are no age restrictions for investing. The key is to the key strategy to invest is to defining your goal, risk tolerance, and time horizon. This is whether you want to invest for the short term, long term, or you're looking to invest for income benefits. Generally, the stock market will show a general uptick for long-term investing. So if you're going into the market always looking for short-term gains, you may want to relook at your strategy. Maybe have a strategy for short-term gains as well as longer-term gains. Especially during a pandemic, some stocks or some companies tend to take longer to appreciate. So what you'd want to do, you want to strategize in a way to ensure you have companies in sectors that will generally do better. So for instance, retail does very well during a pandemic. Everyone is rushing to the supermarket, trying to stock up on their toilet paper, other discretionary items. So you find that retail does very well. While, we saw where tourism didn't do so well or continue to not do so well. So if you have exposure to a tourism stock, you may want to sell or hold that stock for future gains, right? All right, so where do you start, right? We have been discussing a few points in, the sectors that we need to look at, the specific stocks, the growth of the market, how the market has fallen so far. So, you want to start investing and you don't know where to start. So what we have done at NCB Capital Markets, we've launched an online portal for you to create an investment account. So you can visit goipo.jncb.com, create your account from the comfort of your home. From there, you will speak to one of our licensed financial advisors to determine your suitability. And then you will use our online portal to buy and sell shares from the comfort of your home. So there's no need to leave your home to visit a broker to do transactions. You can do this from the comfort of your home. And during a pandemic, we had quite a bit of lockdowns. You're afraid to go out, so you can do all of this online. So this is just a beginner's guide to investing in the stock market. Thank you very much for giving a listening here, and I'll hand over to the next presenter.